Hello everyone and welcome to this video on prop firm payouts. My name is Reese. I run this here small YouTube and X channel called Our Trades, where I like to talk about the market. I like to talk about futures trading, investing, that sort of thing, guys. I am a full-time practicing attorney in Texas. If you have a legal issue and you are in the state of Texas, you may feel free to leave a comment or send me a message and I may be able to help you guys. I'm only licensed to practice in the state of Texas, and if you have a legal issue beyond the state of Texas, I cannot help you. All right, with that being said, guys, in this video I want to talk about what are your odds of actually succeeding using a prop firm. This video is not really designed to discourage you from using a prop firm, although it may have that effect. This video is really more designed to open your eyes as to what you are actually getting into. So before we get into the meat of this matter, guys, I'm a licensed attorney, but I am not licensed with my Series 6 or Series 66 or my Series 7, meaning I am not a licensed financial advisor. This is not financial advice, and you should go talk to a financial advisor if you want financial advice. All right. Guys, with that being said, I'm not going to hide the ball any longer. So you're thinking about trying to trade prop firms, or you've been trading prop firms and you've realized through probably repeated failure that it is extremely difficult to do so. So let me hit you with the bottom line of what the actual statistics are and why you may consider just trading with your own personal brokerage account. Okay, guys, so I put this prompt into the AI. We're going to look at two things. We're going to look at what the AI Grok has to say. We're also going to look at some of the prop firm, what I can basically find on X, and I'm going to talk to you about what the truth is and what you haven't been told. Or maybe you have been told and you're willfully ignoring it, which that happens too. All right, guys, so I put into the AI, what is the estimated success rate, this was my prompt, of traders who try simulated accounts using prop firms, and of those people who pass the challenge, what percentage of them make it to a single payout? And this is what the AI had to say. The success rates in proprietary trading prop firms vary significantly across firms. Challenge types, one phase or two phase, and data sources as the industry lacks standardized reporting. So I want to comment on that real fast. It goes without saying that when I'm talking about prop firms, I'm not talking about a licensed prop desk. I'm obviously talking about this sort of simulated account, Top Step Trader, Apex Trader Funding, that sort of thing. That in fair disclosure, I have been an affiliate in the past for certain companies, and I mean, I didn't make a ton of money, but I made some. So the AI is correct. We have a lack of standardization in this sort of industry where you buy a simulated account and then you can theoretically make money from that simulated account. Okay, there is a lack of standardization and regulation in this industry. Based on available estimates from prop firm reports, industry analyses, and trader discussions, here's a breakdown of the two parts of your query. Note that these are approximations, as success depends on factors like trader skill, market conditions, risk management, and firm-specific rules. For example, profit targets and drawdown limits. So of those things, guys, I will tell you that some prop firms are easier to pass, some are easier to make money from, some are more difficult to make money from. It really depends on their rules. I know that we would all like to believe that the trader skill aspect of that is the largest determining factor of whether you're going to make money doing this sort of thing. But the truth is that there are other factors that are beyond your control, such as the market conditions and the rules that you're being provided with, that also play a part outside of just trader skill. All right, success rate for passing prop firms. The percentage of traders who successfully pass evaluations to become funded is generally low, reflecting the rigorous requirements designed to filter for consistent performers. Estimates range from 1 to 24%, but most sources cluster around 5 to 10% as an industry average. So think about this. All right, I want you to think about this. You're paying $150, $20, whatever small amount of money that is way lower than what you'd have to put into a personal brokerage account, obviously. You have anywhere, we'll be generous, a 1 in 4 chance of passing your evaluation. So we start there before we even get to your evaluation being passed, then getting to the next stage where you're in a funded account and you have to make certain profitable trades again in order to get a payout. We're already at 1 in 4. Now, guys, mind you that if you put money, the statistics say that for CFD brokerages and for futures day traders, you're already looking at maybe 10% if you just put 10% success rate for folks that trade the market on their own accounts. You know, you're already looking at starting at 1 in 4. So let's get started there, and that's being generous. You know, at the low end, we're down at like 5%. So the deck is already stacked against you, and you have a negative expectation when you go in and you buy a simulated challenge account. You're down 15, you're down 20, you're down $150, you're down your monthly subscription fee, whatever it is. Okay, it's a varying amount of money, but I've put in thousands of dollars myself into these things, and I know they can get very expensive. And they get to the point where you might as well just be trading your own account. You might as well just put money into a brokerage account, and you might as well just trade your own money, because you end up putting so much money into to these prop firm accounts that you might as well just trade your own account. If you're going to lose either way, frankly, why are you losing faster and paying someone else for a fake account when you could trade your own account? So we start at maybe 1 in 4. Percentage of funded traders who reach a single payout. Among those who pass challenges, which is maximum 1 in 4, maximum 1 in 4. Among those who pass challenges and receive funded accounts, the rate of achieving at least one payout, for, in effect, withdrawing profits after meeting minimum requirements like a profit split period, is even lower, 20 to 45%. This means many funded traders breach rules, for example, drawdowns, or fail to generate consistent profits before their first withdrawal. Payouts often require maintaining performance over 14 to 30 days. It can be less than that, certain prop firms, but yeah. And there are profit splits. You get a certain amount. For most firms, in fairness, the AI is not exactly right. Most firms will give you $10,000, $25,000 up front without taking the profit split. Reasons for failure include over leveraging on larger capital, psychological shifts, for example, complacency, or market changes that expose weaknesses and strategies that, quote, lucked through challenges. Overall, only about 1 to 7% ever reach a payout, implying that even funded traders struggle. So the estimates from the AI are firm specific, 20%. For example, the funded trader reports 20% of funded traders. So I've never used the funded trader, but I'm assuming that they have a we'll say, be generous, 1 in 4 pass rate, and then 1 in 5 from that point get to there. Broader analyses, 45%. From a study of 300,000 accounts, 45% of funded accounts achieved at least one payout. So that was 7% overall from all the accounts that started from the simulation. Low-end estimates are 4 to 10%. Some data shows only 4% of funded reach profit splits, 10% in other stats. Overall, 3 in 1,000. Discussions on X highlight that while passing is hard, sustaining performance for payouts requires scalable systems, with many funded traders failing due to inconsistent application. I mean, or just bad luck. Long-term retention beyond one payout drops to less than 1%. So I want you to think about this. 1 in 4 being generous. Okay, let's say, assuming for argument, I think we can all agree it's not higher than this. It's probably lower. Maximum 1 in 4 people across the entire industry that try a simulated account are going to reach what's called the funded stage. What is the funded stage? The funded stage is where, if you follow certain rules, you can request a real money payout. So for most firms, unless you're going what's called straight to funded, which is typically significantly more expensive than passing 2 or 3 steps, 2 steps, or 1 step, whatever. It's usually way more expensive, 6 to 7 times more expensive. But if you do the straight to funded, okay. For the majority of the industry right now, you have to pass a simulation, maybe 2 simulations, but usually the industry now is 1 simulation, and then you get to a funded account. Funded account is where you could actually make a payout. And certain companies, even after you reach certain rules, might deny your payout after you. They might deny. They might deny, which is crazy to me. Your personal broker could never deny your money. Anyways, let's assume 25%, 1 in 4, are going to pass the simulated. Of those 1 in 4, so we start at 1 in 4. Of the 1 in 4 that make it to the funded, step number 2, you get to 1 in 5 to 1 in 4 again that might get to a single payout. After you're looking at a single payout, the statistics show less than 1% will ever make it to payout number 2. Less than 1%. Okay? So being completely generous, what percentage on average globally of people that are trying to day trade using a prop firm, what percentage of them being generous make it to a one-time payout? 12.5%, or 1 in 8 is my best estimate. That's the largest number I'm going to go with. It's probably much lower than that, but that's to one payout. What's the number of folks that make it to 2 payouts? And really, we're not talking about millions here. We're talking typically in the range of a few $1,000s. What percentage of those people make it to multiple payouts? Less than 1%. Less than 1%. It's 1 in 100, less than 1 in 100, probably more like 1 in 200, maybe more like 1 in 300. Guys, there's no more blunt way I can put this than you have a better chance of making money at the blackjack table than you do trying prop firms. The statistics are clear. If you go play blackjack, you have about a 50%, it's a little bit less than that, 48% expected value. You're going to lose money over long term, but you have a better chance of making money at the roulette table. You have a better chance of making money at blackjack, of actual gambling. You even have a better expected value of making money playing slots than you do using prop firms. That is just the statistics. Now I want to go to X. Guys, so whenever you see a 0 in the name with the cross out, guys, these folks that are you're seeing on X, they are either paid to market. They're either paid to market these things, or they're bots. I mean, frankly, they're bots, or they're paid to market, or you might have 1 in 100 of these X accounts that actually make money. Guys, I'm just going to come out and say it. You have a better chance of actually gambling at the blackjack table, actually playing roulette, actually playing slots. You have a 40 times, but you have a 3 to 4 to 5 times better chance of making money at an actual brick and mortar casino where we all know you're guaranteed to lose money than you do trying a prop firm. Okay? Prop firms are... Now, this is not to say, do I think, hey, do what you want with your own money. I'm just telling you the statistics. Overall, if you want to trade the futures market, find a broker, put in the money that you need to put in. And you're probably 90% of day traders lose money. I would not recommend for 90% of people. What you should do, and this is what I do, is trade with very low leverage and trade on your own brokerage account where it's your own money and you're guaranteed to get your money out if you need to. You're not going to be able to trade the huge leverage that a prop firm allows you to, but a prop firm, it's all fake anyways. It's all fake. It's fake money. It's fake. You've seen the statistics now. You know that maybe 12% of people make it to 1 payout. You know that less than 1% make it to 2. You know that the odds are stacked against you. You know that you have a better chance of actually gambling in a brick and mortar casino, playing blackjack, roulette, even playing poker. You might have a positive expected value if you can overcome the rake. So that's my opinion, guys. I think that what's going to end up happening, in my opinion, I could be totally wrong on this, but I think you're going to see federal class action lawsuits against probably all the prop firms, but maybe just it'll start with a select few. You're going to see regulation of this industry like you did with online poker. It's going to happen. It's coming. They're basically skirting around U.S. law when it comes to securities, and derivatives. So I know that they're kind of bypassing FINRA, SEC reporting requirements, and they're operating in that area right now. And hey, do what you want. They have legal counsel, and I'm a big believer, and it's your own money to waste if you want to. But you need to know going in that you have a better chance of actually gambling than you do at a prop firm. So what should you do? So you're wondering now, well, okay, what do I do? Because I can't afford to trade on my own account. You wait until you have enough money to trade on your own account. And what you do is you trade with very low leverage. So for example, with my broker, I have gone to my broker and I called them over the phone and I said, disable my intraday margin. What do I mean by that? Disable the ability for me to over leverage intraday. I only want to trade overnight margin, because it's really frustrating when you have multiple contracts on from 8:30 to 3, and you end up 10 times larger than what you can handle overnight. You have to close out a position. If you are trying to get from a point where you're losing money to where you just want to stop losing money, basically, but you know you're going to keep trading, and it is, hey, it's your right to trade if you want to trade, and maybe you might get good at it. Maybe you might make money. Who am I to say? Trade with very low leverage, trade to the point where you are no longer losing money. Ask your broker to disable your day trading margin so you can't blow through all your cash in a single day, no matter how frustrated you are. Put limits on yourself, hard limits, and probably move away from prop firms. Okay, guys, this has been Reese with another video. Listen, this is not financial advice. Do what you want with your own money. I'm just giving you roughly the statistics. And that's it, guys. Please like, comment, subscribe, and follow on X for more content.